Who's ready to find a strategy that actually is effective and works? If you're looking or getting ready to start your venture into trading come 2025, because we're getting ready to wrap up 2024, you are going to want to watch this video in its entirety, okay? And the reason for that, I'm going to show you one of the simplest or easiest strategies that you can use in your arsenal that's going to allow you to become profitable in trading. Now, the key in which I talk about when it comes to trading is market structure. You need to master that first, okay? If you're someone that's constantly or currently, kind of scouring right now, doing your research or your homework, let me tell you right now, the number one thing that you need to get under your belt, that you need to master, is market structure. All right. Then you want to devise a strategy, but I'm here to share with you something that actually works. I've been trading this same strategy for been roughly 14 years now. Okay. And we have a great Discord community that has, a lot of people have switched from trading time-based charts to range charts. Now, if you have something that's working, I'm going to stop and say right now, please continue to trade like that. Trade that way if you're profitable in doing so. If you're consistent, don't switch anything, because I always talk about what it is not, broke. There's no need to try to fix it. Okay. All right. Keep doing the same thing. The strategy is just basically trading and looking for great high probability supply and demand setups. That's all we're doing. But we need to understand the flow of the market. Is it making higher highs or higher lows? Have we just, reached a reversal point to now we're making lower lows and lower highs? You've got to understand that, all right? That is imperative no matter what strategy you trade. Strategies work, but the thing about it, most traders get caught up in is that they have a hard time depicting which way to actually trade. Should I be buying or selling? You have to understand and identify the structural points or movement in the market to where maybe you were bullish and you're looking for pullbacks to key areas of demand. Now the market is showing you its hand, and now you need to look to go bearish and look for supply areas to go short. All right, so pay attention, okay? When I'm looking over the last, say, several days of the market, we were bullish, okay? And then, I'm going to show you the point to where the market did start selling off, which was FOMC last week or this past week, okay? With the Feds cutting the rates, there was some, uncertainty in the markets there, which caused the market to kind of get spooked, and the market sold off, all right? Especially when it came to discussion about the number of times that the Feds were looking to potentially maybe cut rates over 2025, okay? But we're not going to get into all that. You can do your own homework on that. Economic news is very important to understand that. Now, when it comes to structure, all we're looking at are pivotal points where the market is breaking structure, okay, to the upside, making higher highs and higher lows to the upside. As long as we're doing that, and you always want to be mindful and have a higher base chart to start from, meaning making higher highs and higher lows, then we should just be looking for pullbacks to key areas of demand, okay? All right, think of it in terms of breaking structure, demand to the upside, breaking structure to the upside, demand, breaking structure to the downside, that we should be looking for supply setups, okay? This is going to be one of the easiest strategies that you're going to find, because all we're doing is marking up our charts, looking for basically using multiple chart confluence, two charts, a higher base to mark the first zone, and then a lower base, which is our entry chart, to mark the smaller base zone, okay? But it's a zone within a zone. That's the approach there, okay? Mark up the higher base chart first. So what I see here is the market's making higher highs and higher lows. I'm interested in finding a zone in which I could trade from, or at least where the market's going to react it off the higher base chart. And then the market makes this high right here around basically 22,450. Again, half numbers and round numbers. The market's going to react on those at most times. So be careful, because that could be a turning point to where the market starts to make a shift, making reversal. And then what I see here is where the market starts making lower lows and lower highs to the downside. So we're breaking structure lower, right? And at some point, we're looking for the market to possibly break through or take out an area of minor structure, okay? Back down to the downside. And once it does that, and I've shown this diagram multiple times. So if the market was making this type of movement to the upside, you guys that have already been following the channel, you already know what I'm talking about here. Been making this movement here, but then we got a low followed up by a lower high, and then we get a structural break below this area here and this area here. That's the sign of a reversal. You have a shoulder here. This is a pattern. A left shoulder, a head, and then a right shoulder. We're breaking structure below. That is the sign for a reversal back to the downside, okay? So basically when we started making lower lows and lower highs, we were already breaking, excuse me, guys, I hit my microphone, breaking structure back below. Now, this is the turning point for me right here, is where it actually broke this area of, say, structure right here, because we had this nice swing to the upside where the market made a nice break of structure. This was a major high resting right here, broke structure to the upside, came back, broke below an area of minor structure here, taking it out, and then continuously breaking structure lower. At that point, all we're doing is looking for pullbacks to key areas of supply. As long as the market has made a trend reversal, okay? So basically you have, say, a shoulder here, a head here, and then the market making a shoulder right here, and then constantly breaking structure to the downside. All we at that point need to do is mark off high probability zones, meaning supply areas where the market can pull back to, and then move down to a lower base chart. So I'm going to show you an example right here. The market had a nice run to the downside, for example, okay? And here, market pushed down, pull back, break of structure, breaking below this area here. Nice break of structure below this low right here. This is a major low right here, okay? So when the market is constantly taking out major lows, that's going to be a key point to look for an opportunity for a pullback to a key area of supply. So I'm going to mark this area up on my chart. On my higher base chart, this is a 120 range chart. I trade using range charts, not time-based charts. And there's nothing wrong with using time-based charts or ticker volume. Whatever works for you, and you've been trading for a while and you're consistently profitable, please continue to do so. Now, following through with the rest of the strategy here, because I scalp. That's what I do on a daily basis. I'm scalping. I'm looking for 20, 25 points off the NASDAQ, and then I'll shut it down after I get my 20, 25, okay? On the NASDAQ. I'm trading the E-minis, but you can do the same trading the micros too, all right? So the market pulls back to this key area of supply. Again, mark your higher base chart to start with, okay? That's step one, okay? Step two is allow the market to come back to that area. All right. But we want to be able to see if there's a high probability zone. If this is a high probability zone. So step one, mark the area structure first. Okay. Meaning the area of supply resting right here. Now, this is a supply area here, but the difference is that you don't want to be caught up to where there are multiple zones. Say, for example, and yes, the market can react right here, and it did react right here, but you also got to be mindful that it can come up and fill these gaps here and test this higher area of supply right here, which it did, and then it started selling off, as you can see. Okay. We did get a reaction here as well. So the market pulls back to this key area of supply right here. All I'm going to do now is move down to my lower base chart. So let's do that. So this is that low that the market made, okay, on the higher base chart. And then we got a pull back, and it taps that area of supply from the higher base chart, which is this zone right here. Once it taps the higher base chart supply zone, then I'm just going to see, is there a smaller zone? I'm on my 24 range chart now. This is the entry chart. Is there a smaller zone on the inside of the 120 range supply zone we marked? So this is the zone right here. I move over to, oops, sorry about that, guys. I'm moving over to see. So this is the zone where it started from right here again on the 120. Okay, we tapped into the 120 supply zone. I'm looking to see, is there a supply zone on the 24 range chart inside of this 120 range supply zone? Let's blow it up and see. Bring it out. It's a little bit harder to see here on a smaller base chart, but there is, okay? Right here is a supply zone on the 24 range chart that we can mark up and basically carry it forward all the way across, okay? Let's go ahead and do that. Carry it forward all the way across, all right? And this happened, a couple of days ago, so we're having to carry it across, okay? All right, so here we are. I'm trying to get it so you can see where it touched price at, okay? Right here. Right here, it didn't touch it, it didn't tap into it. So we're waiting for that tap into the zone, okay? So this was it right here. This is where it tapped it at right here. This is where it taps it at right here, okay? It hits the lower base zone on the inside of this higher base 120 range zone. And all we're doing at that point there is looking for rejection, okay? So that's step two, is to wait for the retracement back to the higher base zone and then identify a smaller base zone on the inside of the 120 range zone. So looking for a 24 range zone on the inside of the 120 range zone. Then basically just step three is identifying, when to get into the market. And we're looking for the break and close of a candle pretty much. So the first candle that closed here, kind of like a doji to the downside, you can get in aggressive right here below here at 21,675, or wait for the candle break, the next break and close of the candle, which is basically what I'm trying to say is here. You see this last bullish candle to the upside. The moment the market starts to break it below, you can get in or wait for the break and close here at 21,000, say 260, 66 or 265. Okay, get in that trade and then aim for the market to start coming down and filling in some gaps or take out some area of liquidity back down to the downside. So let's say you got in here at 21,666 or 665, and then it comes on down here to around 21,643. So that's going to basically be your 20 points right there that you can pick up on the NASDAQ off that one trade right there. Okay, that's all I'm trying to show you is that 3-step Confluence is what we're looking for. Mark up the higher base chart, pull us back to the zone on the higher base chart, okay? Then we're scaling down to the lower base chart to mark our smaller base zone, okay, inside of the 120 or the larger base chart. That's secondly, okay? And then what we're doing from there is just looking for the rejection. That's step 3, okay? Where do you place your stop loss? Wherever, once the market taps that area, okay, a supply on the lower base chart, and we get that break and close of the candle, you put your stop loss above here at the rejection point at 21,682. Okay, give yourself a few points room right there, maybe 2 or 3 points above that area there, and then aim for your 20 points. Definitely come down here and fill these gaps in. You see these gaps that need to be filled here, okay? Also, there's liquidity here, liquidity down here as well. Multiple areas where you see the market wicking at, it's going to try to take those areas out, okay? That's liquidity. Then it runs back to the upside here, and then it finally reacts off of this area at the break it above this high here, the swing high. But all it's doing is going up there and testing basically that 21,700 round number, reacting off of that and then pushing lower. But still, this was a valid setup because we have a higher base supply zone, okay, off the 120, a lower base supply zone on the inside of the 120 range zone, supply zone, looking for the reaction there and go short. I'm going to show you in reverse of or in inverse of for a demand setup right quick. So this is a demand setup, okay? Now, the market, after it rejected off the area, it came down to the downside. This was from the 18th, 19th, Friday's trading session. The market, came down here and made a low basically around 21,005 or something like that, 21,000. We'll leave it like that. Then it starts to break back to the upside. And what does it do? It takes out some area of structure back to the upside, actually taking out some minor area structure. So if you see this big swing here on the higher base chart, you see this low, lower high. This was at the point where here the market was trading at a couple of days ago, that was a major low. It pushes up, comes back, breaks below that major low right there. So we're looking for the market to take out some area of structure, typically within that swing right there, because that's a major swing right there, and it takes out this minor area structure, this minor area structure right here, back to the upside. And when it does that, we're looking for areas where the market can pull back to key areas of demand. This is a demand zone that broke structure back to the minor area structure back to the upside. It pulls back to this area right here. We mark it up. There's a high probability zone there with a gap. The gap is just basically the imbalance attached to the zone. Okay. So first means on the strategy is mark the zone on the higher base chart. Then we go down to the lower base chart. Okay. We're going to do that now. And we just wait for the market on the lower base chart to tap into the higher base 120 range, a demand zone. That bigger box is the demand zone. Now, once it does that, we are identifying or looking for an area where the market taps into a demand zone, a valid demand zone. Well, we have multiple zones, as you can see. If I stretch this out a little bit, try to do this the best I can. There's one right here, but it didn't really tap into it. It broke through that area here, and there's one resting below. If you see multiple zones, just be very mindful if there are gaps below it where there's a zone at, then the market may come down and test that zone, and which it did right here. It came down and tested the lower zone right here on the 24 range chart. So we mark up our zone, the second zone, which is the zone within that zone, meaning the 24 range zone, demand zone within the 120 range demand zone. It taps that zone, okay? And then from there, again, that is the second part, or step 2, where it taps the 24 range zone that we marked up on the inside of the 120 range demand zone. And then the third part is just basically looking for the break and close of the candle. For me, I'm getting aggressive here at 21,523 or 24. Look for the break and close, maybe right here at 21,532, and then get into the trade. Stop goes in on the back end of 21,517. Again, give yourself some room, 2 or 3 points there, because they love to push up and then come back and test this area because they know people are entering the market right here. They know retail traders are entering the market right here. And sometimes they'll come out here and scare you out of a trade and then go back up. As you can see here, if you waited, you got in the break and close, you aim for areas of gaps to be filled and even possible areas of liquidity to be ran back to the upside. If you got in here, say at 21,528, the market went all the way up there to 21,628, which was a 100-point move right there. Again, all we're really aiming for is that 25 points on the NASDAQ, okay? And you can basically do that one and done trade. I've been doing that, for a period of time now. And I'm here to tell you, once you have made your profits, guys, shut your computers down. That is the best. If I can give you the biggest piece of advice, shut the computers down once you've made your profit for the day. Whether it's your one and done, I don't try to trade more than 2 trades a day and be done with it, because the more you start to trade, then you're over trading or revenge trading, and then you start to lose what you made for the day. The goal is to compound and build capital, okay, if that makes sense. But that's all I wanted to show you in this video here today. Was just basically a 3-step guide to an easy strategy that you can trade surrounding supply and demand. Come 2025, learn market structure, give yourself some time. You probably could do that over the next few weeks, or spread it out over the next couple of months, but learn it. Then if you want to use this strategy, test it out, back test it, forward test it. If you have questions, you can always, reach out on the Discord. Now, the Discord is free. I want to say that now. There are 2 links down in the description portion of the video. The first one's the Discord. It's free, okay? The second one is if you want to become an elite channel supporter. What that's going to do is give you the breakdowns of the trades that I take, that I post over on the Discord community. This is the private community where I break those trades down. I'll post trades that I take on the Discord, but then I break them down in great detail so that traders like yourself can understand the concepts of and the idea of why I took those trades. Looking at market structure, identifying key reversals, understanding supply and demand, what I was looking for, and taking each one of these trade setups so you can take the look for similar setups like this and take them yourselves. Not just that, but so that it makes so that it's understandable to you when you actually, as I'm explaining these things. So if you're interested in becoming an elite channel supporter, all you have to do is click that second link down in the description portion of the video. 2 tiers are going to pop up. The first one is the loyal channel supporter. There's a couple things you receive there, but the second tier is the one you want to join for $6.99 a month. That's for a whole month, okay? So how many of you spend $6 or $7 or $10 on a price of a cup of coffee or on a breakfast sandwich or a lunch sandwich on a daily basis? That adds up, right? Here's something that could be game changing and possibly even life changing for yourself. For $6.99 a month, you can become an elite channel supporter and gain access to all the private community with trade breakdowns. Not just that, but also a great video that I did covering market structure and the video playlist, okay? You get all that for $6.99 a month. But the biggest part of it all, which is the meat and potatoes to everything, is really the trade breakdowns to where I walk you through these setups after setup after setup. There are tons of videos on there where I cover these trade breakdowns, okay? Again, the link is down in the description portion of the video. Make sure to click on and choose the second tier for $6.99 a month. Outside of that, that's all I have for you guys today. I appreciate you tuning in and watching the video content. We're getting ready to go into the holiday week next week. I may, depending on what the market looks like, I may just take the week off. I'm not sure. I may trade 1 day, maybe 2 days. Not sure because the volume is going to be a little bit thinner next week because people are on vacation. They're celebrating the holidays. And things really don't start really picking back up until the beginning of the year. So, I noticed even last week the volume was a little lower than it normally is. But outside of that, that's all I have for you guys. I appreciate you guys tuning in. Now, if you're not a subscriber, please take the time to subscribe to the channel by clicking on the sub button right now. Once you do that, make sure to turn your post notifications on by clicking that bell. Yes, that's important. Click the bell so you never miss one of the uploads here on the channel. And last but not least, right now, if you found value in today's video, I'm telling you this is an easy strategy in which you can learn. So go ahead right now, make sure to click and to subscribe, okay? But also click on that like button and show me how much this video actually, helped you out, okay? Maybe it opened some doors for you. Maybe it opened your eyes a little bit. Maybe you decided to become a subscriber to dig deeper into the video content here. It's there, guys. I'm here to share the information and how I trade and put it out here publicly so that you guys can, at least try it out for yourself. If it doesn't work, I always tell people, because not everything works for everybody. So if it doesn't work for you, then continue down your path to find something that does. But do me the biggest favor and drop a like on the video content right now. I appreciate it. Take care and see you in the next one.